Well, we don't expect that Bitcoin is actually increasing. We only expect that it's increasing once we break above this neckline. Okay, seriously speaking, only once we break above this neckline. So we may just want to take a peep, very close look, very quick look at the analysis or the updated version of the analysis until we go in depth on that. Okay. All right, this is what we're seeing today on that 1 hour chart and on the 15-minute trade management. Yesterday, remember that we had already finished leg A, and we believe we have now finished leg B. We're about to be doing leg C here in red. All of this has been a higher degree 4A, that is a correction. All right, then there was a 1, 2, and 3 in yellow here, that's an internal wave A. All right, now this A in red and B in red and C in red are going to actually add up to compose wave 4B. 4A has already finished. So the first leg of that 4B is finished in 4A in red here. The second leg here in 4B is also finished. We had a 1, 2, and 3. We have had these proportionally segregated overnight, so probably they are correct. We're very much interested in this wave here. You can find that we have some kind of an Elliott structure. Now this is the end of that leg B. This is end of 3. There has been they tried to be a breakout earlier, and this meant that this is actually could be a wave 1. And what we're seeing is an internal wave 2. What's happening now could be an internal 1 into a breakout in a wave 3. Remember, the market is trying to do a 4B, and that C in that 4B should take us to around 50,000, 49,455. We're not saying that the breakout is going to be happening now or in this current leg up. We're just looking at the potential. So there are two scenarios for this. It is very possible, this is the most probable scenario that will happen. The market will move. Actually, we were inside of some kind of an asymmetric triangle. This will give way to an ascending triangle. You saw here the word ascending. So the market will move all the way to the top of this ascending triangle, looking at 47,000, 46,862. This will be internal degree wave 1. All right, remember this is wave 1. We have not labeled it such because we're not yet sure. This will be internal degree wave 1. Then the market will reject back to that lower boundary. This dotted line here is actually the lower boundary of this ending diagonal altogether. This is that dotted line here on the 4 hour chart. The market will just reject back to this, which is around 45,000. Okay, this will be internal wave 2. All right, there should be some kind of a neckline then generated. Okay, so maybe we break above this neckline and then fall back into internal wave 2, so that this is that neckline, and the market then moves on to 50,000 and 49,000. So we still expect some kind of a correction that will give us more than one chance to buy. All right, so what is the trick? How do we know that this breakout is going to be happening, is going to be valid? We need to have, of course, positive momentum on this 15-minute chart, which is this 15-minute plot that we're having here. That's why we have it here today. What we're now seeing on the market is going to test 47,000. This is what you're actually seeing. This is just cyclic and normal. We expect rejection at 47,000. It's very, very crucial to us, very important that the rejection actually, what we are seeing here, this is an internal wave 1. There's a neckline here, should be now somehow a neckline here. We will go live and take a good look at it, but this is the lower degree wave 1. This is a lower degree wave 2. That's an internal 1, internal 2. So the market is gonna move all the way to 47,000. It's gonna be 3. The market rejects. We don't want to fall below this neckline here. If we're seeing positive momentum on the 15 minutes by then, all right, we will consider that yes, this is the end of wave B, and we will buy with a stop below level this level 3 here. Even if the momentum is not really strong or is not yet positive, it should be around 0 or somewhere below overbought, way below overbought on the 1 hour chart. Okay, so this is really what we're looking at. Very important. What we need to monitor, not very important, just what we need to monitor is this Elliott structure, this wave. This is what will tell us if the market will break out or not. So right now we're not really seeing that the market will break out. All we can know is the market is going to test this resistance 47,300, then fall back. Okay, so we want to look now at the 15 minutes. You can see that we're having, of course, maybe not, some kind of a motive wave, very small motive wave, but it's still a motive wave. Okay, so it's something to take seriously, that is. And it is something, of course, to take seriously, that is, but it's not yet confirmed unless you want to go in very early, and it will be a bit way too early. So what we're seeing here is, again, this is the trigger that we usually go by. All right, so there is an internal one, there is an internal two here. The market is now doing that three that we're talking about, and we're gonna reject that neckline, fall back at this higher neckline, fall back to that lower neckline. So let's do the labels. I think we'd rather be in on, even if there's no, of course, it's everyone under risk preference, so really it's everyone under risk preference, but you may consider that we'd rather be into the trade early, even if it's not confirmed, on the belief that by the time it gets confirmed, this is only going to 50,000. So if we're already at 46,000, we just have something like $400 to do for that 1/10 of a coin. We don't want to miss part of the yield or the earnings. Okay, so we're looking at, we expect this is the lower cycle here, 1, 2. We just have to start a new label now. All right, this is what you're looking at. This is this lower degree cycle. That's a 1, 2. We're interested in this signal trigger, internal 1, internal 2. Okay, so all of this is actually internal 2. Now we're doing 3, and we all know now the rest of the story as of that point on, what's going to happen. Again, it's still premature because of this spike here. Would mean actually that this label goes up here. This is all wave 1, and this is all a correction wave 2. So you have to take this into consideration too. So we're not really sure where this one label gets in. It's either here or up from there. It doesn't really make much difference. All right, so now this higher spike here, okay, would mean, but we're not, the order of the price action does not let you have that this is a 1 and then a 2 breaks lower than the bottom of 1, so we cannot really accept this. Level wise, it would hold that this is a wave 1. What you're seeing now is just a correction into 2. If this is really true, then you can get levels below a neckline here. If we are ever going to have a neckline here, you can get levels all the way down. On that correction into 4, you can get levels all the way down to 44,800. At this point in time, if we want to join the market based on this trigger signal that we're having here, any correction should be contained by this level, 45,500. Of course, to allow for spreads, you're looking at 45,280. You're even looking at 44,500. Both levels, I believe, are going to be seen because this is going to be doing a 3, then a 4, then a 5, and then this is a higher degree 3, and that will correct the top of 1. All right. If we want to join the market again, we just have a stop this time at 43,000, not even 41, just this level here, 43,000, 42,500 at the most, just below level 3. This should grow into a growth wave and take us hopefully all the way to 49,700 and 50,000 at probable. Okay, so any correction back into, even as of now, any corrections into 45,600, 45,500, you have here 45,416 are probably buys on this kind of momentum with a stop at 43,000 or 42,500. So if you're buying 45,500 with a stop at 42,500, it's just $300 per 1/10 of a coin. We're doing a 1-to-1 risk reward because this should go to 49,500 at least. Okay, so between 49 and 45, this is $4,000 or $400 per 1/10 of a coin. So it's almost a bit more than 1-to-1. All right, so Bitcoin is a buy. It is not yet confirmed, but we would consider that we have some kind of positivity and momentum. We believe that we are now terminating, actually bottoming out of wave B, all right, and going into higher degree 4B. This higher degree 4B is just about to start. It's going to be doing an A and a B and a C. Okay, what we're going to be having, apart from this ascending triangle that we're seeing here on the 1 hour, we're seeing here that ascending triangle. At that point, we're going to be having some kind of double inverted heads. If we break above the neckline, then we go back and we're just doing a shoulder at the neckline. Okay, in terms of strategy, what you would consider to do is, if you're not already long, if you're long, you would want to hold to this level here, 49,455. We believe you can even get to 50,000. We believe we're going to contest the bottom of level 1 here. So this bottom of level 1 here, actually, well, it's not really shown on our I believe it takes us to 51. We will take a good look at it live market. Okay, so we're going to bottom of 1 here. You're looking, of course, at 50,000, around 50,500. Okay, that would be your ultimate target. We could consider to buy, if we're going to buy 1/10 of a coin, half of that 1/10 up front. Right, we just check these levels, 45,400. And then add another half if we get a retraction back all the way down to 44,000. We have already checked that on the 15-minute chart. Okay, or you can buy 1/10 of a coin right up front there, 45,400. If you have reserve money, you can add another 1/10 if the market drops to 44,000. We will check this, 44,000. If the market falls below 42,500, we just want to close out and it would be a failed trade. It's really as simple as that. The risk at that point for 1/10 of a coin is only $300, I think. Of course, for 2/10 of a coin, it's going to be 600, so we have to work it accordingly. Alright, so after rejecting at 47, you probably are going just to see again 44,900, 45,000. So you may want to add at 45,000. We're already almost there now. Not really, we are 46,476. We would want to buy just a correction back, 45,500, this level here, 45,600, just above the spike into level 1, into this yellow one here. It's a spike, so it should have spiked again all the way down to 45,230. Of course, you're better off if you are buying a bit higher to be in the market. So you're looking at 45,650 should be filled in all cases.